Hi, I'm Joel, and today I'll be talking about the lender option, borrower option loan scandal and the role of the Financial Conduct Authority. So, for those of you on Twitter who have been following this story, over the past 2 weeks, news has emerged of a new banking scandal involving a type of variable rate loan known as a Lobo, sold by banks including RBS and Barclays to around 240 UK local authorities. The issue with these loans is that they were sold with short-term teaser rates, which initially undercut the alternative available borrowing from central government via the Public Works Loan Board. And then the banks had the option to increase the interest rate in future every 2 to 5 years. RBS has been particularly active in this market since it was bailed out in 2009 and has been selling a type of Lobo to councils known as an inverse floater. On inverse floater loans, the interest rate payable by local authority increases as the interest rates decrease. So since 2009, with Bank of England base rates at historic lows, local authorities like Edinburgh, Newham and Cornwall have found themselves paying interest rates as high as 7 to 8% when they could otherwise refinance and borrow from central government at around 3.5% to 4%. Going back to the role of the Financial Conduct Authority, the FCA do not claim to regulate public finance in the UK at all. They claim local authorities, like some small businesses, are sophisticated investors and should know and understand the risks themselves. What we are seeing almost universally is that the local authorities did not, however, understand the risks, and we may well see a similar case emerging to that involving SMEs missold interest rate hedging products, where the local authorities claim that the risks of these loans in a low base rate environment were not particularly well explained by either the banks or the financial advisors like Capita and ICAP, who were giving advice to the local authorities while taking kickbacks from the banks and brokers. Now, why is this relevant to SME Alliance members? I think it's relevant because, firstly, in terms of developing allies in the fight for financial reform, I think the idea that 240 local authorities around the country have now fallen foul of the banks should mean that more and more people are aware of some of these issues around systemic mis-selling involving the City of London. And I also think the fact that, particularly with the inverse floater Lobos sold by RBS, you've got similar issues that are experienced by SME swap mis-selling victims, whereby businesses like local authorities become locked into high interest rates at a time when Bank of England base rates remain low. Now, on Monday, there's going to be the first evidence of the local government committee examining the scandal, and so expect to hear more in the news over the coming weeks.